Dwayne, this is our CEO, Marlon Stanley, and our CFO, Diane Hall. Everyone, this is Dwayne Winslow with FIMSOFT. A little backstory for you all. I was at a seminar where Dwayne was the keynote speaker. I was intrigued by the FIMSOFT initiative called Cost Management Intelligence, which includes things like optimizing cash resources, increasing return on assets, and generating cash through improved IT acquisitions. After I got back from the trip, I went to the FIMSOFT website and took their 10 questions CMI challenge, which determines whether there may or may not be opportunities to better manage our finances with IT and any other asset-intensive areas of our business. The questions included many more points of interest than we as a board have been discussing as ways to get the company back on track. So I invited Dwayne here to explore the possibilities.
Dwayne, I would assume you've probably researched our company before you came over. Our story isn't unlike many others at this time. We are at an inflection point. The economy is difficult to say the least. Sales are down, credit is drying up even though our rating is high, material and fuel costs are outrageous. Our stock just took a kick to the teeth, which limits our ability to raise cash in an offering. It's just tough out there.
I understand. This environment is tough for everyone.
We've been looking at ways to reduce costs across the board. We need to make sure we don't negatively impact operations or sales. Changing our real estate holdings in this market would impact us negatively. We can't afford to add to the unemployment rate, not to say what layoffs would do to morale. And we've invested too much in training our people to let them go benefit another company. That leaves our focus on IT, which sounds cost-intensive and time-consuming.
IT is a great place to start. In fact, there's often benefits to other departments.
The bottom line, Dwayne, is that we need to control costs. I don't want TXB to just weather the storm. I want to come out of this stronger than our competitors. How can you help me do that?
Well, I have had the chance to review Al's responses to the CMI challenge and have found some initial areas of interest. Al, can we get this displayed on the projector? The first thing to do in any venture of this magnitude is to determine and validate your IT baseline costs. This will facilitate a closer working relationship between finance and IT. There are multiple touch points between IT and finance that should be formalized as best practices, ensuring that IT decisions are aligned with financial policy and vice versa. As an example, we all know that asset management is the responsibility of finance. Yet finance believes that IT is far better positioned to handle asset management in their area. The concern is that they utilize the same financial terms, measurement criteria, and figures to represent IT recurring cost depreciation in contracts. There is a specific way to manage IT assets that is both operational and financial. FIMSOFT can aid IT in the development of a joint chart of accounts with finance, which helps increase the return on assets and results in a reduction of spending in terms of capital and recurring costs. Normally, the chart of accounts must accurately describe cost elements in accounts, but in most organizations, it is rarely complete as it pertains to IT. It simply doesn't tell the whole story. For example, all of your computers fit into two entries in the chart of accounts: computer hardware depreciation or computer hardware leases. Though this works for gross financial reporting, it doesn't permit you to determine how your spending is being utilized or accounted for at a granular level. Once fixed, we can identify each of your costs based on architecture, application, and business unit or accounting policy. We will know that we can conserve cash through leasing certain assets. We will be able to identify which assets consume the most personnel resources or generate the highest facilities costs. We will be able to tell you the percentage of your gross revenues that is consumed by your IT costs. This important ratio will be an excellent benchmark you can use to measure your effectiveness in managing your IT costs as compared to your peers in the industry. Armed with this information, finance, procurement, and IT can easily work together to optimize your unique operations and improve governance and compliance at the same time. This will surely constitute a change in the relationship between finance and IT, but your entire 3 to 5 year roadmap depends entirely on this initial process.
I'm impressed.
I can see where you're going with the IT finance relationship, and I'm excited to know more, but you mentioned benefits to other departments. Can you explain that for me?
I'd also like to hear a few more regarding IT, if you could.
Not a problem. From an IT perspective, we often see better control of costs through full lifecycle management of assets. We are far more precise in justifying new IT investments through cost management, which brings down costs without adversely impacting infrastructure. Directly connecting assets and their associated costs in FIMSOFT's relational database improves governance reporting and enhances financial control. Generating complete and accurate financial reports no longer requires the user to learn new languages. We can rapidly analyze the total cost of ownership of any asset, service, or resource to determine impact on the company. And most importantly, we are able to track the TCO baseline for the complete IT infrastructure, ensuring that your costs and budget targets are met. To answer Diane's side of the question, from a financial perspective, the benefits are a consolidation of our chart of accounts, giving us the ability to monitor and track every single cost. We can now easily automate cost recovery, allowing us to rapidly implement accurate IT chargebacks to the business units on a regular basis. Improved cost reporting can spill over to other services such as clinical engineering, fixed assets, and building facilities. Overall, an improved ratio between IT costs and revenues develops. Increased return on assets is realized through improved system utilization, energy savings, floor space reduction, and lower software licensing costs. An improved ROA means better utilization of cash resources and can save jobs. And best of all for the financially minded, investment justification for every asset purchase, IT or otherwise, can be implemented and deployed quickly and easily with the solutions we're discussing. Now, every proposal you get is accompanied by a full financial analysis and one that you'll track online over time. You can then see if you're on track to meet promised metrics and make an early determination of the cause if you fall behind.
I can immediately see how this will benefit us. So what is your proposed course of action? Where do we go from here?
I would propose that we hold one of our cost management intelligence workshops, either on-site or online. This is a 1-hour session where we can gain an understanding of the scope of your environment, and we provide you with detailed understanding of our services, methodology, software, technology, and intended results. We will then present you with the cost and processes necessary to give you those.